Hey guys, this is a market update. A raft of economic data is coming out in the next few weeks that is going to decide where Bitcoin goes and where the market goes over the next 6 months. Growth scares and deflation, that is the name of the game right now. And I've got the details to prove it. This right here is out of the UK and the EU. US figures are coming out today after this video post probably. But I want to talk about that and how it affects the price of Bitcoin, or what I think is going on with the price of Bitcoin in relation to all of this. Inflation is not going to be an issue over the next 6 months because we're looking at wide scale economic recessions, and the data is starting to come out to prove all of this. We also have the Jackson Hole meeting this week where Jerome Powell is going to come out and give his kind of forward thoughts on where the market is. You have to read through or listen through to what he says, because what he's saying is basically going to keep up with the Fed's line of inflation isn't under control. We need to keep smacking the market. We need to keep raising rates. But you have to look at the actual data and what's going on here, because you can't trade what's happened in the past or even happening now. You have to look at what the next 6 months is to make some decisions. So I want to talk about that in this video. As you can see over here on Bybit, this is the Bitcoin price right now. I just think we're in a consolidation right now, and I don't think it's very tradable. We had a very, very good upswing, and that was a really tradable event. That was a very specific pattern that we traded before. But now we've broken this uptrend. We've also broken this support right here at kind of 22,000. We've actually turned it into a little bit of a resistance, as you can see here. So if you're trading short term, this is right in the middle of a range. Difficult to kind of make a call either one way or the other, because you're right in between the range here, right? So the resistance is up at 25, and the support, the kind of next major support, is down at 20, maybe to test those lows again. And it's right in the middle of the range right now. I honestly think if you're a long-term investor, this whole price action around this level from 20 to 25 is just one big consolidation. Like if you're not trading short-term or on leverage or anything, it's just one price really. It doesn't really matter either way, because what we're looking for now is economic growth figures and rate expectations. So it's gone from inflation and we're going into essentially recessions right now. So I'm going to talk about that in this video, looking at some news headlines and obviously the figures that have just come out of both the UK and the EU. The US figure, like I said, 8:45 US time on the East Coast. Before we get into that, if you want to trade on Bybit, I'll leave the link in the description to deposit bonus. Deposit crypto or fiat, get up to $4,000 as a deposit bonus in your futures trading account. So if you trade futures, check that out. Growth around the world is slowing right now, and so inflation is not the thing we need to be worried about. When growth slows and you get recessions, governments act by not raising rates and even stimulating the economy through stimulus in terms of government spending. Yes, they're going to further debase their currencies if recessions hit, because if recessions hit, the tax implications mean that they don't have enough income to pay the interest on the debt that they have, let alone anything else. So here we have from the UK, you can see the actual PMI that just came out today is 50.9. Anything above 50 is growth. Anything below 50 is a recession. You can see manufacturing came in at 46 right here. This is a recession in manufacturing, and services have saved the day. The EU is a shambles. The PMI 49.2, which is a recession. It's slowing. There's no growth in the economy. Manufacturing has been destroyed, but services as well, like not as strong as the UK, but they still grew a tiny bit. But as you can see from the previous figures, these are previous figures here, even the growth is slowing. So from 51.2 last month to 50.2 this month. So the rate is down, and next month we could see as people basically go back and stop traveling because it's the summer holidays right now, this could be down. So we're going in the direction of essentially almost no growth to negative growth and recession. That's what the data shows, and you have to look for the US data as well. So looking forward, we have to make our plans on what's going on. China are stimulating their economy. They've had their own woes with the property market. They're lowering interest rates and debasing their currency, or not debasing, they are essentially devaluing their currency in order to spur exports. Now, usually that's not seen as a very good thing by other countries, especially the US. However, at the current time, the US may actually like the fact that their currency is strong in relation to the yuan because they can buy things from China and they are cheaper because the yuan is devalued against the dollar. It may be short term, that's a fairly decent thing for the States at least, but there is slowing or much lower growth in China than they want. And so they are stimulating their economy. UK and the EU, no growth. These are not inflationary environments. We have, manufacturing here. You can see the rate of change down and to an area where it's going to be essentially negative. This is the EU area just falling off a cliff as well. And then we have the United States falling off a cliff. And again, anything under 50 is recessionary or negative growth. And in the past, anything around 50 or below has signaled a flip in policy from the Fed. Whether it's a flip or a pause or anything else doesn't really matter, because what we're trading with Bitcoin is the nominal change in the rate of, where things are going. And things are not looking good in terms of growth, which means lower rates potentially and easing of the economy, potentially even stimulus, as crazy as it sounds, because you have to keep the fiat Ponzi going. And so obviously Bitcoin not having any income or earnings is going to react very strongly to potential changes in the way where rates and monetary tightening is going, which is obviously not being tight, because in 6 months' time, you're looking at governments probably trying to stimulate their economies further. We also have this on Twitter from Macro Alf. It's a pretty good account to follow right here. The index of the US top 10 leading indicators has a 100% success rate in anticipating every recession over the last 40 plus years. By the time you get 2 to 3 consecutive negative prints, it's a done deal. You get a recession. Last release was at 0, as you can see down here. Now, is this a growth scare, or is this actually leading into a recession? It kind of doesn't matter, because what we're trading with Bitcoin is a change in the rate environment over time, from a debasement of fiat currency and the stimulating of the economy, the debasement of the debt that these Western economies have, versus something that can't be debased. So understand what you're trading with Bitcoin, right? As you can see here as well, this is really important. The US appears to be on a collision course with a debt trap of their own creation, where it's ultimately forced to finance its own largesse. The CBO project's debt interest payments alone will exceed the entire remainder of government deficits by 2027. Essentially, you have so much debt, and when rates are high, it becomes much more expensive to service that debt. For a country, just like as a person on your credit card, exactly the same. And the only way you can pay it off, if you haven't got the tax receipts, is to debase your currency so that you debase the debt and interest payments over time. Governments do not like recessions for very long, because tax receipts fall and they can't service their debt. So that's when they start trying to ease the economy again. So this week at Jackson Hole, when Fed Chair Jerome Powell comes out, listen to what he says. Listen to any hints that if growth slows, that he may actually ease off this rate hiking cycle. He's going to be data dependent, meaning he's going to look at inflation, but it's really up to him to see how long is he going to go? Is he going to wait for the jobs market to be absolutely wrecked, or does he actually understand that he wants to catch this a little bit early, and so it's a shallower recession, or is he just happy to absolutely smash the economy into a deep recession? No one really wins in that regard. It's easier to default on your debt over a long period of time rather than it is short and sharp, because you just have to climb back out of it again. So where that leaves us, you can see the Bitcoin price is just waiting for this right here, which is Jackson Hole. And then we have the latest CPI figure right here as well. Again, if it comes off weak, that's just feeding into the story that inflation is coming down, growth is slowing. And so why raise rates and, do QT in that environment? Probably won't, which is why you might see the market trying to bottom out and trying to anticipate this kind of flip, even a flip that says we're not going to go as long or as high in terms of rates as they were initially saying. So yeah, a lot going on. There's a lot of uncertainty, which is why you get the volatility right now of Bitcoin moving up and then selling off quickly. But that's the way it is. Volatility is good to trade, whether you're short or long term. If you want to get that deposit bonus on Bybit, check the link in the description, up to $4,000 in your futures trading account. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.